This
Good morning.
conference will now be recorded.
One more time. Good morning, everyone. Thank you for joining BBB's webinar effort to try to address the financial solutions, financial information for business owners. When we conducted a survey, which is now probably 6 weeks ago, financial information was the #1 item. Interesting enough, followed by marketing, but business owners were very interested in trying to stay abreast of financial solutions. So we've invited Katz Abosh, and of course a BBB accredited business with us to join us and try to impart some information. And I know that Trey and Terry will give opportunity for question and answer at the end, or maybe throughout. I do want to remind you that there is a little bubble in your top right-hand corner. You can click on that bubble and insert chat questions. And those questions, Clay serves as a fabulous moderator. And we will also be sure that we keep Trey and Terry abreast of questions you might be asking. So this is actually, as much as I want to say Trey and Terry's time, it's not. It's our business owners' time. So we want to make sure we're answering your questions, and we're here as a service to you. So with that in mind, please don't be shy and please don't be quiet, other than Clay has everybody on mute. So you might be quiet. That's why we encourage either a wave or using the chat box. So with all that information shared, I'd like to introduce to you again Katz Abosh, and I would like to introduce Terry Grant. Terry is a director with Katz Abosh. She provides financial, strategic, and management planning services to a broad section of businesses and individuals. Terry's been working and presenting nonstop, I'm sure that is true, on the stimulus programs and helping clients understand how to navigate through this unprecedented time. In addition, I want to introduce to y'all Trey Gailey. Trey is a principal with Katz Abosh. He ensures that financial accounting and management services are tailored to fit a company's size, strategy, and needs. Trey also leads the firm's associated outsourced accounting and payroll service group, Bluestone Services. So I'm so thrilled to reconnect with Trey because we had the honor of Trey serving as one of our outsourced when we were outsourcing our services. So Trey, thank you for still being my friend after after that. I appreciate that and your vote of confidence. And I'm going to let you kick it off and start us off with what we have to learn today. Thank you again.
Thank you, Angie, and good morning, all. Happy to be here and happy to have the opportunity to present and help you guys out. So if we want to take a look at the agenda here, we're going to cover a few different things. Main things are going to be cash flow and labor strategies, which is the half of the presentation that I'll tackle, and then my colleague Terry Grant will take over and cover more of the best practices and updates on the specific programs. I'll probably touch on some of the programs in my first half of the segment. But I know she plans to go in more detail on some of the programs that are out there in the ever-changing world of them, because they literally change every day, essentially. So we're going with, what we know is set in stone now. I'm sure you guys have seen a lot of rumors on some things that might change going down the pipeline, and that very well might happen, but this is everything that's finalized now, and we're presenting you with what is true at this point in time. So Clay, if we want to go into, we can skip over my intro slide. Thank you. So preserving and projecting cash and liquidity. So obviously, this is a dire time and more difficult time for certain businesses and other industries than others. But the #1 goal right now should be preserving cash, whether it's through, government assistance or furloughing some staff. We can get into more of those and what makes sense at a later point. But really the #1 thing is to hoard as much cash as you can to get through this crunch. So, there's a few ways to do this. One is right-sizing your expenditures. What makes sense right now? So there's some things that might make sense when things are fully operational, everybody's in the office, customers and your client base is thriving and they need those certain services, so you have to pay for those expenditures. The biggest for most companies, most likely you're unless you own your building, you're paying rent for the property you're in. A lot of landlords are accommodating some sort of rent relief. So if you haven't reached out to your landlord and it's something that you would like to do, I would recommend reaching out to them. They'll probably ask for some financials and some projections on lost revenues and stuff, but a lot of landlords are granting anywhere from 2, 3, 4 months of rent relief. It's really a deferral where you'll essentially make it up on the back end of your lease more than likely. So it's not like it's free rent. You're going to have to make it up, but nonetheless, it helps with cash flow right now and your liquidity. With that goes deferral of expenses. So no matter what kind of industry you're in, for example, we deal with a lot of medical practices, and their vaccines and medicines are their main expenses. And a lot of the big players are extending their terms, extending out discounted periods, and waiving, late fees and finance charges. Finally is projecting out your cash flow. I mean, this is a general business practice that you want to do anyway, but even more so now for a couple different reasons. One, you want to plan accordingly and make sure that, you're looking at things on a conservative basis and, kind of a worst case scenario, just so you're ready, because, this COVID beast is throwing all kinds of wrenches at people, and it's kind of just, you kind of got to roll with it and be as prepared as you can. And another thing is, with a lot of these government programs, you really want to have as much documentation as you can. And from our guidance and our understandings, we're recommending, whether it's at your board meeting, if you hold them in your board minutes, just going over a detailed projected cash flow statement showing the projected lost revenues and why you think you need assistance and stuff. So that's just a general rule of thumb that we're presenting to all of our clients and anyone that we can give guidance to. It's just really good anyway. Again, it's a good practice to do anyway and get used to, but even more so now, with this current dynamic. So if we want to go into the next one, Clay. Thank you. So as mentioned, hoarding cash and, keeping the cash as much as we can, even if things don't seem like they're as bad as for others as they are for you, it's still good to really hold as much cash as you can now until things really start to get better. So what are your number one sources of cash? Collections. So, it's a tough time to really hit on your clients, like, where's my money? But, with a little bit more downtime, right now, probably more than you're used to, it's a good time to really reach out, check in on the client. And, more times than not, if they're a good client, they might even bring it up and say, hey, I know I owe you money, you can expect it now. But nonetheless, if you're in a different kind of world, like a medical practice, again, reach out to your insurance companies, try to get that aged collections in, because that's helpful more now than ever. Again, we kind of mentioned the extended terms from vendors. I kind of hit on this with negotiating, maybe longer payment terms, waiving finance charges, late fees, loan proceeds. So there's a few different loan programs I'm sure a lot of you are aware of and hopefully have applied for. You have the economic disaster loans that have been around through the SBA. They have forgiving long-term repayment terms, pretty low interest rates. You have the PPP loans, which is the hot topic right now, the payroll protection program, that is. There's still funding left on round 2. So if you have not applied for that, we encourage you to do so as soon as possible. So those are the two big players right now. Maryland, at the onset of this, had some local programs, the Maryland Small Business COVID Emergency Grants, which was a grant non-repayable that ran out fairly quickly. And then you had the Maryland Small Business Emergency Loan Fund, which was up to $50,000 for 50 employees and less. That's also ran out, and they had a very long backlog. A lot of clients applied for it, really never heard anything back. So, I mean, at this point, that's probably not looking good if you have not heard back. And then the other program that maybe some of you guys got in on was the layoff aversion funds, which is also a state program where they were reimbursing you for costs to, enhance the ability to telework and continue to keep your employees on board. So it's exactly what it sounds like, a layoff aversion program. But we won't spend too much time on that because they ran out a couple times. They kept refunding it, and within 48 hours, it was gone again. So that's kind of irrelevant, but just to touch on all the available programs that there has been recently. So, the grants and government programs are a big source of cash. The payroll protection program, again, I know Terry is going to hit on some of the more specifics of the program, but that's the one that's really incentivizing you to keep your employees on staff. And I lead with that because this next slide, thank you, Clay, is paying for staff. So right sizing staffing costs, should I lay off, furlough, terminate, and then the unemployment factor. So a lot of the issues with the PPP right now is there's an 8-week recovery period, right? So the way it works as of now, whether it changes at a later date or whatnot, the way it's set right now is you have 8 weeks from the time you get your loan. From then 8 weeks forward, you have that time to spend it on payroll cost, and then you can use 25% of it for rents, utilities, and other qualified expenses. So the thing is, your loan amount was calculated off of when you had a full workload capacity, right? So you're calculating this maximum loan, and while it can be 100% forgivable if you utilize it appropriately, the biggest kicker there is the equal amount of full-time equivalent employees by June 30 of this year. That's something that they look at in calculating the forgiveness, as well as 75% of the loan funds that you spend must be on qualified payroll cost. So, I'm sure you guys have heard a lot about this, but just a quick summary, the payroll costs are obviously compensation up to $100,000 per employee on an annualized basis. So essentially you can take $8,333.33 per month per employee in straight comp, right? So you can count that as an eligible payroll cost. Employer covered medical insurance, dental, vision, etc., and then state and local employer payroll taxes. You don't include your FICA tax, etc. So that's kind of a summary of the PPP. I'm sure you guys have been, this has been in your face, and as business owners, you guys have probably done a lot of due diligence on this, but feel free to ask us more questions if something specific isn't covered. I'm just kind of going fast to make sure we get to everything here. So the big thing, this kind of leads into unemployment. While understandably so, the federal government has beefed up, for the lack of a better term, the unemployment by extending it out a possible 13 additional weeks, up to an additional $600 per week, if you're on unemployment. So one of the big things that is the issue with this 8-week recovery period with the PPP is, does it make sense to lay off somebody or keep them on board? Because it's kind of the double-edged sword, because you want to utilize those payroll costs over 8 weeks, but you might not necessarily need to be bringing these people back yet, right? So you're paying people when you're not really operational just to use these funds, whereas they can probably get just as much or more on unemployment. So in the event that work comes in and someone's on unemployment and you offer to bring them back and they just don't feel ready or don't feel comfortable, or the biggest thing right now is unemployment's so good, they're making more on unemployment, so why would they come back? That's, a lot of clients personally I'm dealing with, they're in some of the service-based companies where they've kind of gotten the green light to do some of the elective stuff and bring people back. And they're like, well, why don't you talk to me June 15th or something? Give me another month. So, that's a problem for the employer because they can't pay those folks. While it doesn't hurt them and they don't count that against your full-time equivalents, you're not able to utilize those payroll costs. So that's a big thing with unemployment. However, if it makes sense, it doesn't make sense to pay someone just to utilize these funds if you don't need them working, because they're going to be all right. Just thinking about your employees, they're going to be okay on unemployment. They're going to, there's a beefed up program covering them a longer period. So really, you just need to think about what makes sense. Who do I need on board? And really just plan accordingly. Everyone's situation is different. If the work's there, then surely try to keep them. And we can get more into the detail on this in the questions and whatnot, but ways to do that is, one of the ways to eat up more of your payroll costs, if you truly want these folks to stay, is you can offer hazard pay or an incentive to come back, right? You can give them a little bone or a little bonus to help you utilize your PPP costs and just substantiate that as an incentive to come back to work in somewhat of a dangerous time. So that's something that we're recommending to our clients if you truly need them back. That's not just to use this money and force people to come back and then, lay them back off on July 1st. We're not saying that. We're trying to take the approach that if you truly need these people to sustain what you're doing and you have the work available and you want to get them back in the shop, then you can offer them, a bonus to come back, or hazard pay, we're calling it. So it covers this slide. Yep, next slide. Yep, potential pitfalls. So with this, like with anything, that hits us like this, we've never really seen anything to this extent, but waiting too long to make changes is the case for anything, right? You want to try to be as proactive as you can, which goes back to the cash forecasting and projecting. Even if you think you got things under control and they're not going to get much worse, you still need to be conservative and think worst case scenario, and not just look at a real short period, but we want to look out the next 3 to 6 months and longer. Like when we start expecting to ramp back up, how long does it take to get back to where we are? And that plays into when do we bring the staff back? How much of the staff do we bring back? And it's all part of the equation. Overextend on debt, you can get all these loans in and all. And one thing to moderate during, for example, with the PPP loan, right? Let's say you get $200,000 in, you only end up using $100,000 of it, while that 100,000 would turn into a loan for the unforgivable portion that's only at 1% over 2 years. If you have the liquidity, just pay it back so you're not, stringing yourself down with extra debt. While the money's definitely useful and needed for most, if it's not needed and you make do with things how they are and you don't want to be strapped with debt going into the future, you can pay it back and have no interest and just pay it back at the end of your forgiveness period. So upset key vendors or customers. Again, this kind of goes back on not being too aggressive with past due AR and just maybe a gently reminder or just checking in on them and seeing how they're doing. And maybe it leads to that. Same thing with vendors. If it's a key vendor, more times than not, they're going to respect that relationship as well and work with you, but don't be too forceful. Wait too long to apply for government programs. This perfect case in point is those state programs. That was kind of unfortunate because with the demand, no matter how quick you were, it was kind of just luck of the draw, unfortunately. But some of these others, like I mentioned, if you have not applied for the payroll protection program and it seems like something you need and you've heard about it and want more information, feel free to reach out to us. But this is definitely something that you want to do now as soon as possible, because the second tranche of $310 billion, there's still money available. But, with the demand, you want to apply immediately if you have not done so. So not being fair and transparent with employees. Again, our advice is bring them back if you need them and offer them an incentive to come back. But, we're not necessarily either recommending, we already hit on this, just bringing folks back to eat into your payroll protection cost and then laying them back off after the 6/30 critical calculation date. That doesn't make a lot of sense for more reasons than one. So just be fair and transparent with the employees, keep them up to date. A lot of employees are like, do I still have a job when things get going? Just provide them with as much guidance as you can. Obviously, nothing's certain right now in a lot of cases, but just be a good employer. And then watch out for incorrect information. We kind of hit on this while we were chatting before the webinar, but our professional services companies, right, lawyers and CPA firms, et cetera, we're trying to help our clients out as much as we can. And I'm sure you've all heard of the projections on certain things changing and maybe some of this all changing. And we're taking the approach that we want to guide you with what's firm and final right now and what's finalized, and going with the guidance that we have. We're not going to give opinions or how we feel it's going to turn out. We're giving you the most set in stone things that we can. And Sarah and our team at the firm, we've done a really good job. We've created a COVID resource center on our website. If you haven't been there, I would highly advise checking that out. Our current client base is getting an email blast every time we have something new for them. So that's just a little boast on us, but really look out for that incorrect information. Make sure you trust your resources and do a little bit more research if you think something just doesn't sound right, or reach out to us. So if we want to go to the next opportunity slide. Yep. So, with any kind of tragedy or unfortunate event, there's always opportunity. So really it's to find those opportunities. So a laser focus on your core business. This gives you time to focus on your true goals and objectives. So in good times, businesses get sloppy. So you utilize this as an advantage and take that advantage over your competitors by thinking about your clients and reaching out and checking on them, not just for AR, but seeing how they're doing and just strengthening relationships. We're kind of just going to hit on all these as we go, not necessarily in any order, but firsthand I work closely with the outsourcing with C-level business employees and business owners. So, I'm in the trenches with them, and I feel like I'm a part of every company that I work with, right? So I'm there through the thick and thin with them. So, this has just provided us more of an opportunity to connect with them, whether it's through these Zoom or GoTo meetings, visual meetings, and really helping them what makes sense, or, they feel comfortable and confident in running something by us and just getting our opinion on something. And, when do I bring my people back? Which program should I apply for? It's really helped us strengthen our relationships. So I know this works, and it's something that I'm highly recommending to you all to do with your client base, because it really does matter right now, especially when times are tough. Reaching out and lending a hand, or just being there for a sounding board for them, it means a lot right now. So, and I'm sure you guys have been doing that, but that's just something to really focus on. And this is also a time, as times change, it makes you see some sort of different business offerings might be possible that you wouldn't normally think about, right? So a different working dynamics, the remote functions, and the ability to do things remotely and telework, whatever it may be. It just might open your mind up to a few different offerings that you can offer and actually strengthen yourself for the other side. So, and with labor opportunities, a few months ago, people couldn't find, certain personnel. So there's a lot of folks unemployed right now that are eager to get back to work. So, you don't necessarily, let's say this might be a time too, if someone's not working out and they get furloughed, and it's just makes sense to maybe look into different solutions and replace them with folks. While you don't want to do that kind of stuff, if it makes sense for the business, now is the time to really think about that kind of stuff too, because you might not be cranking and churning like you normally would, in a different way than you normally would be, but this might be the time that makes the most sense, right? It gives them unemployment, gives them a transition period out to find other work. So there's a lot of different things to be thinking about, and it's impossible to think about everything all at once, but the idea of my presentation was to just really give you a summary and a snapshot of what we're seeing that are the issues, pitfalls, opportunities, and everything out there with our client base and working so closely with businesses. This is just some stuff that we wanted to touch on. Surely, we can provide you more specifics, as I mentioned, but now is the perfect time to turn it over to my colleague, Terry, who's going to go over more of the specific, stimulus programs and some of the best practices involved with, the COVID-19 programs. So, leaving with a quote there. Yeah, so it's okay. We can go into Terry now. You're good, Clay. So I'll turn it over to Terry.
Thank you, Trey. I think you brought up some really good points and opportunities about how to get our businesses back up and running. Once you can allow people to come to the office and come to your businesses, I think it's going to be really important to make sure that as business owners, we're handling our cash flow properly and taking advantage of the different programs that are out there. I'd like to take a little bit of time this morning just to go through some of the additional things that came out with the CARES Act and the Family Medical Leave Act in the way of tax relief that we're probably not remembering anymore. So I'm going to take a couple minutes, go through some of the tax reliefs that are available, and then dive back into the PPP program and a couple other opportunities that are out there. So to start with, there is what's called the direct stimulus payments that came out for $1,200 for single people, $2,400 for joint. Again, these stimulus payments will phase out if your income is over a certain amount. It also allowed for $500 per dependent. If you are a dependent on someone else's return, you're not going to get that stimulus payment. It's going to come to the parent's return in the form of a $500 additional payment. You need to have filed either your 2018 or 2019 return in order to get that stimulus payment. If you are using your 2018 return, what happens is everything is trued up when you file your 2020 return. And Clay, you can go to the next slide. Another thing that came out was cash donations. You can take up to 60% of your adjusted gross income in the form of a donation. I'm sorry, you can take up on your individual return, you can take a standard above the line deduction of $300. The 60% limitation on your itemized deduction was lifted, so you can take up to 100% of your itemized deduction of your charitable donations as an itemized deduction. Corporate limitations were also raised from 10% to 25%. So if you're inclined to be charitable during these COVID times, that will definitely benefit you from a tax perspective. Employers, if you have students that are in college and have loans, you can make up to $5,250 in loan payments for that employee, and that will not be considered a taxable fringe benefit to that student or to that employee. So that definitely is a nice fringe benefit if you are in a position where you're trying to get people back into your workforce and you're looking for something to dangle. If they're still in college, this is a great way to offer them a payment on their college loans. Next slide. There are also some retirement related things that came out. If you were to take a payment out of your retirement plan, typically you would have a 10% penalty for that. That has been waived for up to $100,000. And you can also borrow up to $100,000 from your 401ks up until September 23rd of 2020. Any repayments on that loan can be delayed for a year. So if you're really in a bad place and you need money to pay your bills if you're not working, definitely think about your retirement plan and potentially borrowing from your retirement plan just to get by. There, for employers, we have a deferral of payroll taxes. An employer can defer up to 6.2% of their share of the Social Security tax on wages. And you can do that from March 27th through December 31st, 2020. Half of the payment will be due December 31st, 2021, and the other half will be due December 31st, 2022. So that will provide you with some additional cash flow as well. by deferring those payments. Just keep in mind, you're still going to have to pay it eventually, but it's allowing you to pay it when potentially your cash flow is better. You still have to timely deposit the employee portion of that FICA tax though. So keep that in mind. It's only the employer's share of the tax that is deferred. Next slide. A couple other additional reliefs. Net operating losses in 2018, 2019, and 2020 can be carried back 5 years. That is definitely new, and it may open up the opportunity for you to amend some prior year taxes and get back some tax that was paid in those years. There was also an 80% limit on the amount of net operating loss you could take each year. That has been removed as well. So also from a business perspective, there was a limitation on the amount of business interest you could deduct, and that was limited to 30%, and that 30% limitation has now been increased to 50%. There was also a key technical glitch when the last tax reform came out that did not allow you to take bonus depreciation on qualified improvement property. So if you had an office building and you did improvements to the inside, you weren't eligible to take the $100,000 bonus depreciation, but that glitch has been corrected and now you can take the 100% depreciation. So there may be some opportunities for you to catch up on some of that depreciation expense for those qualified improvement properties and pay less tax as well. Next slide. So in the CARES Act, the new payroll tax credit came out, and this was an employee retention credit available to employers hurt by the coronavirus, but who continue to employ and retain their people. So you were able to get a credit, a Social Security tax credit, against up to $5,000 of each individual employee's wages. And any excess was also refundable. You can get this tax credit relatively quickly just by reducing the employment tax deposits that you're making by the amount of the payroll credit the business qualifies for. So if you calculate that amount and you just reduce your tax deposits, that will allow you to get the credit right away as you're making that deposit. And then it'll all be reconciled when you file your Form 941. You can even seek advance payments for these credits by filing, there's a new form out there, Form 7200. By filing that form, that will allow you to get that credit in advance. And again, everything will be reconciled as you file your 941s for the year. And I'm sure those forms are going to look totally different than they have in the past to account for this stuff. There are a lot of rules and complexities when it comes to this. If you also have the PPP loan. If you have the PPP loan and you've taken some of these credits, it will reduce the forgiveness of your PPP loan. So you have to be careful when you go to calculate your forgiveness of debt on the PPP loan. Next slide. Okay, so the U.S. Chamber of Commerce Foundation has launched a Safe Small Business Fund. This is another one of the programs that have come out recently. It's a grant program for small businesses that are in economically vulnerable communities. This application process began April 20th, 2020. it's great for small businesses that are in hub zone areas, things like that. And it's just another one of those grants that are out there that you can take advantage of. Every day, companies are coming out with additional grants. The counties are, the states are, even companies are coming out with these. So I really recommend that you keep an eye out for these things, Google them, because there's more out there than we can even keep track of at this point. Let's go to the next slide. There's another program I just want to mention. The Federal Reserve Bank came out with Main Street New Loan Facility, and this is a loan that any eligible lender can give to you. It is for, I would say, it says it's for small to medium-sized businesses, but it's really for larger businesses because the minimum borrowing capacity is $1 million. If we go to the next slide, Clay, here's the eligibility requirements. It started back on April 8th, and the loan features a 4-year maturity. The amortization of principal and interest can be deferred for 1 year. The minimum loan size is $1 million, so, and the maximum is 25 million. So that's why I say it's really kind of for the bigger company, but it does offer a good loan opportunity if you didn't get the PPP or you weren't able to get any of these grants. It's a low interest rate loan that'll get you through the period of time. Clay, next slide. So Baltimore County Small Business COVID-19 Emergency Relief Grant Program just recently came out, and this started on May 11th. This program awards up to $15,000 to small businesses in the Baltimore County based area. It is first come, first serve. There's a website you can go to. It also answers a lot of frequently asked questions. If you haven't applied for this, you might want to go on the website and check that out right away, because I don't know it'll last that long. Next slide. Which brings us back to the PPP loan. So what's new is that the second round of funding came out on April 24th. Some of that is still available, so if you haven't applied, you might want to do so as soon as possible. New guidance comes out on this almost daily. We are up to, I want to say, question 48 of frequently asked questions. And each day it addresses something different that we're all wondering about. And I think there's still a lot of open questions as to how to calculate your forgiveness of debt, even though the application came out, I want to say Saturday. But anyway, this is the second round of funding. The frequently asked questions, I put a link in here, so if you want to check them out every day and keep track of what's going on, you can. I do want to mention that there are several bills that have that are out there. One is already passed through the House. It's called the HEROES Act. It's got a lot of stuff in it. Some of it I wouldn't even consider COVID related. Last I looked, it had a 95% chance of passing. It had made it through the House. It was going to the Senate. Based on everything I'm reading, there's a very good possibility that it will look totally different by the time it makes it through the Senate and to the president. It's got a lot of good stuff in it. It's got a lot of things related to the Paycheck Protection Program that would help small businesses. For example, it would extend that 8-week period so that you had a longer period of time to use those funds and to bring back employees. I think that's one of the really important things of this HEROES Act. Hopefully some form of it makes it through, although I have heard that the president probably will not sign it unless it does look differently. So more to come on that, but that's not the only bill that's out there. There's several others. So we're hoping there's some additional funding for the small businesses that had to lay off people and still can't bring people back, because I know there's a lot of small businesses like that, and they just don't know what to do. They can't even use the funds because they can't bring their people back because there's nothing for them to do yet. So it's an interesting situation, and we're hoping that some things come out that will correct some of these problems. Next slide. Okay, so the forgiveness application has come out from SBA, and the banks will be facilitating this process of the applications. My guess is that they're going to need to use outside consultants to help them process all of these forgiveness applications. They have a period of 60 days from the time they get the application to give you an answer as to how much will be forgiven. And you have to go through the application, you have to provide data, there's various schedules. It'll be a little bit complex, but my concern is that the banks are not going to be able to process these applications as quickly as they're supposed to meet this 60-day window. And I'm anticipating that they're going to be using outside consultants to help them. So the more organized your data is when you ask for this forgiveness, I think the quicker your application is going to be processed. So I would be very careful about how you put this together. Clay, I don't know if you can click on that link, the Treasury. Yes. So I just wanted to give you a quick look at the actual loan forgiveness application. So it's 11 pages long. There's a lot of instructions. The application itself is maybe 1 page, but there's a lot of schedules that go with it. So let's page down, Clay. Keep going. Okay, stop. This is the actual application itself. And you can see it's pretty basic. You fill in some general data, and then it'll ask for your payroll and non-payroll costs. And then it'll ask you about your full-time equivalents. And then it calculates your forgiveness amount. Seems pretty simple. But if we page down some more, okay, so this page is all your certifications. And then page down again. We have what's called Schedule A. And Schedule A is where you begin to go through all your calculations. Page down. So here's where we're starting to calculate compensation, full-time equivalents, and it's going to refer you to various tables. So this is where it starts to get a little more complicated. And page down again, Clay. So that was the schedule, but then these are the tables where you also get into more detail about how to calculate 75% of your payroll costs and your full-time equivalents. And I think that's where most businesses are going to struggle the most with coming up with the correct calculations. And these are the kind of things that will be audited by SBA. But let me just say that SBA has provided a safe harbor amount of $2 million. So if your loan was less than $2 million, most likely you will not be audited. That doesn't mean that the bank won't go through your calculation and make sure everything looks appropriate. That just means that SBA is not going to come in and audit all your data. So if you're $2 million or above, you want to make sure you have all your documentation and it's complete and accurate, because SBA at some point will come in and take a look. It could be SBA, it could be the banks. We're not sure about that yet either. So that gives you a general sense of what you're going to be looking at. There we go. And that is called for SBA's Form 58. What was that for? 3508. And the next page is just the application itself and what was included in it, which we just looked at. So I think now is a good time to open things up for questions and answers. Trey and I are happy to answer anything you would like to talk about.
I will unmute myself here for a second to check to see if we got any questions in the chat. It looks like we really don't got a few shout outs. Just a thank you for the awesome presentation. Another thank you. This was super informative. I'll check the emails. Let's see. No questions in the chat though.
Clay, is it possible for you to quickly, without a lot of difficulty, unmute people just in case somebody would like to say something? So many people aren't on screen, so they can't get our attention. Is that a possibility? I just want to make sure, while we have experts and we have their service, that if anybody has a question, we are able to hear them out.
Definitely, that's an easy button to push. The unmute all button is right here. So I've unmuted everybody. If you have yourself muted, you need to click that on your own screen. But right now, looks like all the callers are unmuted.
Okay, all right. So Trey, Terry, we'll wait just a minute, just in case anyone has questions. But Trey, I've always said to you, one of the things that your guidance always provided me is that you speak human. Your presentations were such that I always felt like you're on my, you could come down to my level. And to both of you, I want to say one of the things I truly value, having heard other presentations, is you humanize the information. You gave us advice of some things we really need to do. So thank you.
Yeah,
Like,
thank you.
Do we have a question or?
It's a question about just if the slides will be available after this, and the answer is yes, we will have these slides available as a PDF. I'll email everybody that's registered with the recording of this presentation and the actual slides themselves. So yes, to that question.
Thank you. Thank you. All right, Trey, Terry, do you have any closing remarks if we don't have any other questions?
Just, our contact information is below. Don't hesitate to, send us an email or reach out with anything more specific. If you didn't think of it now, feel free to reach out. We're more than willing to help.
Yeah, we're fielding questions every day. We understand it can be complicated and confusing, so we're absolutely available to help any way we can.
And again, we do recommend checking out our website's resource center. And I think in the comment section, Sarah, our marketing director, did note the location of our resource center and how to sign up for our emails and notifications as they become available.
Yep,
So
Sarah included that link and the relief wizard link, and we'll include both of those links in the follow-up email as additional resources.
Great.
Great.
Oh,
right.
hang on.
Oh, yes.
Oh, no, just another shout out. Just,
All
very
right.
informative.
All right.
Thanks for the awesome information.
Thank you, guys. Thank you, Terry, Trey. Thanks to Katz Abash. We really appreciate it. Quick reminder, BBB, your BBB Greater Maryland delivers. We have a resource page that links, provides registration for all our upcoming webinars. And this Thursday, May 28th, or that's next Thursday, May 28th at 3 p.m. We'll be doing one talking about mental health and helping us as employers preparing to cope with and help our employees cope with some of the emotional mental health issues, because in a lot of ways, well, we all agree, this COVID has been in essence a trauma for everyone. So we want to be sensitive to and supportive of our employees as they are considering returning to, again, some state of normalcy. So we hope to hear or have some of you join us for those upcoming, and Clay also includes a link to our resource page so you can see these upcoming webinars. So with all that, we send wishes of continued safety to everyone. Gratitude for you giving us your time today, both Katz Abash and all business owners who took time away from their work to share this. So with that, thank you all so much.
Thank you.
Thank you.